Welcome to the Bucket Plan on Demand, a podcast for financial advisors based on the best-selling book and process that simplifies financial planning. Hear from skilled industry professionals and special guests each episode that will help perfect your approach with clients and your results.
Hello, I'm Dave Allison, host of today's episode of the Bucket Plan on Demand podcast. Recently, I had a conversation with Jamie Hopkins, CEO of Bryn Mawr Capital Management and WSFS Bank, where we discussed what sets top advisory firms apart: exceptional service. We had so much to talk about that we divided our talk into two parts. You're currently on part 2, but we've included the link to the first episode in the description of whatever you're listening or watching. In today's episode, we dive into how financial advisory teams can create more meaningful, consistent service by combining smart automation with a human touch. You'll hear practical strategies for improving onboarding, navigating market volatility, and delivering on your promises. We hope you enjoy. Well, I think it also goes to the importance of empowering your people and client segmentation. Like, you're clearly, I would imagine, based on your travel schedule, like a Marriott, whatever's above Platinum Elite is probably where you are, right? I know I'm Platinum Elite and you run circles around me when it comes to traveling. But, those team members know you're, a big spender. You're a good client at that hotel chain. And so it makes total sense for them to run out and grab you a 6-pack of beer. And I've tried to even stress that in terms of like our business at Allison Wealth. Like, we have client categorization: red diamond, blue diamond, diamond, opal, and ruby. And so we really train that active listening and then pairing it with our client service matrix to empower our team. Like, it doesn't have to be me or whoever the lead advisor is. The team has discretion to go out and do little things like this to make a big difference, because like, you're just like me, I'm too busy to even think about a lot of this stuff. I run from meeting to meeting, but the team behind the scenes can go and execute a lot of this stuff that just makes you look so good.
Yeah, and it's actually one of the takeaways in this too, as you empower your team like you've done, Dave, is make sure you do empower them and give them some budget to work within. Because I've heard this before, as people say, "Hey, I'm going to go do this, and we're gonna grind it, right? Like, we're gonna figure it out." And you don't give anybody any budget to work with, it will fail in that world, right? Like, and it doesn't. Like we've talked about, these can be pretty low dollar things, but you do have to give your team that permission within bounds, within reason, right, to be able to spend on whatever it is. They need to drive somewhere and buy something or order something. And again, like we talked about barbecue sauce, like $8 and a hot dog, $2, like, tissues, like, $1.50. Like, these things can be really cheap, but you do need to make sure that somebody knows that they can spend on this versus them trying to figure out, right, really interesting surprise and delight customer experience moments without any money. Actually just becomes really frustrating for people long term.
100%. And any way you could remove friction and create convenience, I think, is another big win. Just last week, one of our largest clients, they needed to get a number of irrevocable trusts created, and they were in California. I'm here in South Carolina. Our attorney was in Arizona. So the attorney sent over all the documents. We printed them, shipped them. So now they had this big stack of legal documents, and they would have had to go to like the UPS store with 2 witnesses in front of a notary to sign all this stuff. And for about $400, there was a service that sends a notary and 2 witnesses to the client's house and sits down and walks them through the signing of all these documents. Actually, wealth.com just is rolling out this service also. That, like, for me, that is such money well spent to create like a frictionless, convenient experience for this client. Because especially somebody that's worth $80-90 million, do they really want to go sit in a UPS store and find 2 witnesses? Or would they rather have the comfort of somebody coming out to their house?
Yeah, that's why I always use Uber rideshare. So I have another person and the driver to be my witnesses. That was a joke.
That's a good little tip though. I like it. So speaking of that, that's
Yeah.
quite a good lead into technology. I mean, the reality of it is technology is continuing to drive efficiency and scale. So how can advisors balance automation with the human touch? Because like I know I'm as guilty as anyone. Like I'm of the generation, I'd rather send a text than make a phone call. I'd rather send an email. I'd rather, record a little video of me explaining something than sometimes a one-on-one meeting. But there's obviously a balance because people do business with people that they like and they trust and they get along with. And, a lot of our clients, they want our attention. They want our
Mhm.
our interactions with each other. So how do you see kind of technology interacting with experience?
Yeah, this is a great question. And I think where, you know, technology and experience interact is always interesting because I think some people view technology as kind of removing this client experience and human interaction, whereas I really do believe personally that this is going to increase the amount of time that people spend with clients. I've actually talked about this a couple times too, and maybe I'm wrong in it, but my hot take around AI is actually it's going to push more in-person client meetings in the long term. And part of that is my concern about the kind of safeguards around AI and that people are going to be wary to share on recorded calls and having note takers there and just across any type of virtual network. I think this is going to get scarier and scarier. And the ability to authenticate that Jamie and Dave were actually together is going to be important. So I think we're going to see that, but that's a little bit different. For the most part, when I think about technology, it's where can you use technology to remove friction, automate something that really has no real value add. So you think about like pushing trades, right? That was a really like not like value added process for the most part. And so most firms have said, look, like we're going to try to automate as much trading as possible. Like being 1% better in trading is not going to be what we're going to sell clients. Like I just don't, I don't see firms putting on the front of their their marketing materials like we're the best day trader out there, right? We're really good at executing trades. Like you want to be as good as everybody else, but you're not trying to say like we can execute trades 3 seconds faster than somebody else. Like that's just not a value add. So we try to use technology to automate that. I think rebalancing is another one, tax optimization, right? Those things, technology is going to do better and more efficiently than we can. They are good, they are important, but we're really not going to like distinguish on the human element or service on those. So it's let technology do those things. I think that there are still areas that people hold on to. In the advisory space, the biggest one is probably asset allocation still today and picking the investments for a client, and that we can do that better. And really, I think that one is slowly going away. I mean, you've been part of the industry for long enough to, remember 20 years ago, that was so many people's value add, and it's declining, 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 declining every year at this point, and will continue to go down, right? Like, we're just not going to be better than algorithms and things like that. Now, our ability to communicate it effectively to clients, I think that's where our value comes in, right? To have the conversation, alleviate fears, explain things. But it's probably not the picking of it, right? The picking of it can actually be done better elsewhere. Or centralized with planner, like investment IAs and other things, but getting the advisor out of that workflow. I think the last part is account onboarding out there in general. If you look at like on average, is still pretty subpar. I think it's a bad experience. Some of the ACAT transfer stuff out there is still a pretty bad experience. Even funds kind of sitting and moving between places. Sometimes it's, it kind of just goes into a weird black box and you're not really sure where the transfer is between custodians. I think all of that is pretty subpar today. I think there's bright spots out there. While I'm not invested in or use Altruist today, I've gone through theirs a bunch of times. Actually, did another demo of account opening there today. Like they're doing better than some of the other, kind of traditional historic players and the money moving ACATS account opening. I think there's some other fintech companies popping up in that space that are doing a much better job. Those are going to enhance client experience, I think, across the board at some point. We just still have our big custodians and BDs are built off of old tech stacks. So there's a lot of tech debt there, and they haven't moved those, to the experience that people are expecting when they pick up their phone, right? And how quickly they can open something, move money, transfer money between peer to peer. Our traditional orgs are still slow in that regard. And that's the thing. Like, while we might as an industry say, hey, our custodians are about the same, a client experience is now measuring us towards how Amazon moves money around,
Right.
right? Like how I can buy something and fund an account and move it over here and move it back out, all within a matter of minutes, not days. And that experience our industry is going to have to bring to people, or we're going to fall behind because that's the expectation that is getting set. We are not different from that level of service anymore. That our industry and what we provide is going to be compared to other experiences, not just experiences in our sector.
Well, and I even think if you look in our sector, I mean, I joked about a year ago, I opened up a Coinbase account and how quickly I was able to get that account open and funded versus if I go to some of our normal custodians, how long it takes for me to get an account open, funded, and then ready to trade. It's night and day. And I think that, one of the things that actually right after this podcast, I'm having a meeting because, as there's certain things we can control and there's certain things we can't right now. Like, I'm not going to change what Fidelity's account opening process is going to be or Schwab's,
Well,
but as an advisor, we can do a lot to control the client experience through onboarding. We're hiring a coach who specializes in creating a really unique client experience around onboarding. She's going to be joining us at our June Mastermind Collegium and helping our advisors and teams build out what their unique experience looks like through that onboarding phase. I was just at the gym this morning, and this lady that I work out with, a few days a week, she was sharing with me that she just hired a new financial advisor, and she said for 30 days, her money was like in a black hole. She didn't hear from the advisor. She couldn't see her accounts. She didn't know what was going on. And these are common stories. What
yeah.
accelerates them is when we have a 30 days like we just experienced, where markets are going up 3, 4, 5% or down in a single day, and people don't have visibility. And so, again, to Jamie, your point, like, we can't control some of the fintech at the custodial level, but we can absolutely control the onboarding, the communication, the experience that our clients are going through as they're, moving money over or onboarding into our firms.
Yeah, when things are volatile too, it's a little bit different, right? We're seeing these massive swings in the market this year, due to new information coming out almost every day. In that type of environment, the communication about what's going to occur in that in between time, I think, is more important. When things are fairly steady, you're not raising those red flags to people. But I think right now, having money disappear for 30 days or even in a day, right? We've had 6%, right, intraday swings this year, right? Like that's a big difference.
Yeah.
That's for a retiree, that was a year and a half of my retirement income distributions, right? Like, that was a big deal. And so, we had somebody ask about why they did a trade request, and then this is something that like you and I would know, but they bought a mutual fund, and then we're asking why they didn't get the price earlier in the day when they put in the request, and it's like, well, you get end of day pricing for those, right? But that's a good like client experience piece is actually in a market that's moving like it is today, where people are hyper aware of volatility. If somebody's onboarding, to let them know that like they're going to get end of day pricing versus right the price that they log in, saw the ticker at 10 a.m. That's not the price that's landing in a mutual fund for the most part, right? Like most funds are going to be at end of day. So like that matters. But that is a client experience point, and it's one of those ones of the touch points. Like, what are you trading? Are you getting the intraday or end of day pricing? Normally we might say, hey, this didn't really matter to people, but this year it's probably going to matter all year, is my guess, because we're so hyper aware now of the volatility. So if you get a volatile day by accident, it just occurs and you're moving money that day, to be prepared for that type of question that we didn't always get in the past.
Yeah, that's awesome. Well, as we conclude things, I mean, It sounds like, and we're certainly in agreement here, that the advisor-client relationship is evolving, in a world where information is continuing to become more and more commoditized, but connection is scarce. And, again, I mentioned earlier, people do business with the people that they connect with the most. So, any last kind of parting, words of wisdom or insight that I know you're focused on as you're either developing the next gen to think about, how to make a successful career as a financial professional, or some of your most experienced and successful offices that are really trying to redefine their client experience?
I think if you get really excited about this and you say, I want to go out there and redefine our client experience and enhance it, it goes back to a couple things. So, right, it shouldn't be like a flash in the pan movement for you. You've really got to sit down and say, like, are we willing to commit to this? Or are we too busy? Because if you're too busy and you have that terminology every day and you feel overly stretched, you're not going to go deliver some amazing new client experience. It's just not going to happen, right? You're going to get pulled to the side. Maybe you do it a couple times, but it won't become core to who you are. I actually think similar to what you did is if you want to do this the right way, you honestly have to go hire somebody whose job it is to sit there and build out this client experience. It's actually going back to Will's story. That's what they did in the restaurant. They tried to do it just with the staff, and then they hired somebody whose only job, they didn't also wait tables, they didn't also make food, they didn't also check people in. Their job was client experience. So if they needed to run out and get something, they really leaned into that. And then you have to put budget behind it, right? You can't just assume you're going to do this right out of the thin air. And then I think lastly, which we kind of leaned on, is what are the things that you can automate or get rid of today that you're spending time on that can free you and your team up to be more effective, to focus on these value add areas and enhance this client experience? Because ultimately, we are in the service business, and the firms that grow deliver great client service out there today, have great NPS and client satisfaction ratings. But if we don't deliver this end to end client experience, they're going to end up going elsewhere in this industry eventually, because we can't have 30 days where money disappears, right? There's going to be better solutions that can do it in minutes, not 30 days. And so eventually, if they they exposed to that, they're going to say, why haven't I always been going here? And they will make that decision.
Yeah, and I want to give two quick takeaways as examples to really just reinforce that. I mean, like, I'm such a just a big proponent of, like, do what you say you're going to do. Follow through on the deadlines. If you say you're going to get something to a client by this time, get it to them. Like, that's in your control. But to your point, I hear a lot from advisors, well, I get so bogged down with this or that or email or catching up. Like, I'm also a huge believer in the sundown rule. Like, respond back to clients' emails by the end of the day, even if you don't have the answer. And I was chatting with one of our advisors about this more recently, who was struggling with that. And it was a very simple solution that we put one of our client service associates in charge of monitoring that advisor's email. So that client service associate could respond back saying, hey, Sally, I just want to let you know we got your email. Dave's wrapped up in a few meetings. We anticipate being able to get back to you with an answer by Thursday. But if you need anything before that, just let us know and we could change some things around. But like, that is so much better than that client's email sitting in your inbox going unanswered for a day or two. And the reality of it is, it starts with what you said, Jamie, doing an activity inventory. If you do an activity inventory and you find, email is very time consuming for you, it's probably a good sign that you can try to delegate that accountability to somebody else on your team. Not that they can be the subject matter expert to answer the email with the technical response, but they can certainly respond with a friendly, smiley customer service response that says when you're going to get back to them. And so I love those kind of action points that you shared earlier, and this was super valuable. Again, it's always fun having you on the podcast and chatting with you. I would say if anyone wants to get a hold of Jamie, just attend any industry conference and he's there. So we don't even need to give your email or phone number. But I think I'll see you at Wealth Management in Miami. I think both of us are speaking down there. So
Yeah.
And again, awesome having you on the bucket plan here.
Yep. Thanks for having me on. I appreciate it, Dave.
All righty. Thanks a lot. Take care, everyone. We'll see you on the next episode.
Thanks for tuning in to the Bucket Plan on Demand, brought to you by C2P, an organization whose purpose is to educate, train, grow, and support holistic financial advisors so families can achieve true prosperity. Subscribe today for the latest episodes and insights. Visit c2penterprises.com to learn how we can help support and enhance your advisory business. At the time of delivery and any subsequent publishing, information was deemed reliable but is subject to change by the time of listening or viewing. The contents of this piece include options and projections of C2P, are subject to change, and are for informational purposes only. The information provided in this presentation is not intended to be individual investment, tax, or legal advice.